Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer and today we're going to be doing something a little bit different, and I'm going to talk about why I think the AI stock boom slash bubble doesn't really make sense to me yet. Usually I do individual stock analysis on this channel for the most part. Every now and then I have a topic that I think needs to be discussed, and I think we've gotten to the point now where this is one that does need to be discussed. And I'll explain why I don't think the reasoning that I've seen so far and the reaction of the stock market overall that I've seen so far, why it doesn't make much sense to me. So let's first look at a chart, a fast graph of the S&P 500. Let's see, ChatGPT came out right around the beginning of December 2022. And then once the market kind of got a feel for it for a month or so, and then the stock market basically took off. And I'll explain why this is mostly like an AI thing. So it's up about 50%. Since then, it's actually up a little more. I have another graph I'll pull up here in a minute and show. During that same time, S&P 500 earnings are only up about, if we measure from the end of 2023, earnings per share fell by 2%. And then this year they're expected to rise 13%. So let's call it like a 10% or 11% rise in earnings per share for the S&P 500 and a 50% plus rise in the stock price. Now, if these stocks were trading like super cheap back here, that would be one thing. But at the beginning of this rally, the PE ratio for the S&P 500 was about 19. So it wasn't cheap to start with. So we have a 10% rise in earnings over 2 years, which is 5% per year. Really not great. And now granted, this is coming off the COVID boom and everything, but still, about 5% growth per year, and we get a corresponding 50% rise in the value stock price of the S&P 500. Well, that has mostly come from AI-related stocks that the market seems to like during this time period. So let's pull up, here we go. So this chart I made on Y charts. And what I have here is, this is from the launch of ChatGPT through like December 3rd, so yesterday as I'm recording this. Now the RSP is the equal weighted S&P 500. So this is all the 500 stocks equally weighted and what they've performed at, compared to SPY or SPY, which is the market cap weighted index. That's the one where, you know, like 10 companies are representing the vast majority of, maybe even more like 7 companies, the vast majority of the weighting of the index. Most of those companies are AI related in some way. So when you look at the difference, these are the exact 500 same stocks, okay? But the difference in returns is nearly double the market cap weighted one index, which is the normal one, compared to one that's equal weighted. So this is really almost all AI. The difference in these is the AI boom. That's how you can describe it. Now, if you want to get even more into it, the QQQ, which only has 100 stocks in it and is still cap weighted and has a bunch of the AI in it as well, without the other 400 kind of weighing it down, is up like nearly 80%. Probably today it is over 80% because it's up again today. So, you know, nearly triple the equal weighted S&P 500 stocks. And that's in about over 2 years since the AI boom basically started. So the question is this like justified or not? I don't think it really makes sense. And let me explain why. So let's pull up just a little heat map here. This is a heat map on FinViz of the S&P 500. So we can visually see some of these weightings, right? So I think it is okay for a person to make the case that NVIDIA is a huge beneficiary of the AI boom, right? They are selling these GPUs, these chips, and they are needed for, well, not just AI, but they have other uses as well. I do want to look really quickly here. Let's go to FastGraphs. I do have a 25% off affiliate link for FastGraphs down in the description if you're interested in trying it out. So if we look at NVIDIA's earnings, we actually can see that it could be justified. Their price rise could be justified because when the AI boom started, they actually were in a down cycle or a bust from the COVID boom. And let's see here. Don't look at the PE necessarily, but you want to look at the earnings trajectory. So it was down like 25% that year. And then since then, it's been up nearly 300% in 2024 and another 120, we'll call it 25% in 2023 and 2024. Their fiscal years are start in January, so we're in their 2025 already. But at any rate, their earnings have actually completely exploded to the upside. They're nearly 10 times what they were in when ChatGPT came out so publicly. So let's actually just look at what the stock price has done. I don't know if it's up 10 times, almost up like 8 times. So the stock price rise, in theory, at least is supported by these earnings from NVIDIA. But so I think NVIDIA could be justified theoretically. Now I don't know how cyclical they're going to be, so I'm not fully on board. But I don't think NVIDIA's stock price movement is necessarily irrational or crazy or anything. It could end up working out. Okay, so that's not the case that I'm making here. The case that I'm making is it doesn't make sense that the whole stock market is moving like that. And here's the reason why. They don't list the exact numbers, but if you go and Google and use AI to find the answer, you'll see that about 46% of NVIDIA's sales come from 4 companies, okay? They are Microsoft, Amazon, Google, and Meta, okay? So basically, what has happened is NVIDIA is making money off of Microsoft, Amazon, Google, Meta, and some of these other giant mega cap companies. I know Tesla was buying some, it was announced, and there's been others. And then other chip stocks have rallied, like Broadcom, along with the AI themed things, right? So the money that NVIDIA is making is coming from Amazon and Microsoft and Google and Meta. Well, guess what? They're all in the S&P 500 too. They're all mega caps too. So really this money is just being transferred from one part of the S&P 500 index to another part. So it doesn't make sense for the whole index to be rallying. It might make sense for NVIDIA to be rallying, but it doesn't necessarily make sense for the whole thing to be rallying because these other companies are actually spending money and giving it to NVIDIA. Okay, so that's the first step to understand the problem that we have here. The next step is to say, well, maybe they're doing that because they're going to be more productive, or AI is going to help their business, and so it's worth it for them to give NVIDIA the money because they're going to make more money on top of it. That's not what I see yet, okay? It could happen still, but what I really see are these guys trying to fend off competition that would arise if they didn't invest in AI, or they're fighting amongst themselves for things. So Microsoft had like Bing, they had the AI. They're going after Google's business when they do that. And Meta's going after Google's business. And Meta and Amazon are competing using AI for their advertising, right? So, or maybe they're trying to get search. But basically, it's these guys, and you could toss Apple in there. You could toss Tesla. Is that the big 7? 1, 2, 3, 4, 5, 6, 7? Yeah. So that's like the Magnificent 7. And if you put all those guys together, really, they're so big, you have to ask yourself, how much market share are they going to take from people that are not part of this group? Because the whole group's been moving higher as if they're all going to be winners relative to the whole rest of the S&P 500. That's what this whole first chart I was showing here. So the market is saying that because all these companies are part of AI, that they're going to reap the benefits this much more from all the other companies in the S&P 500 that you see on the heat map. Now, that doesn't make a ton of sense to me, right? Because these other businesses, in theory, are the ones that are supposed to get the enhanced productivity from using Microsoft, Google, Meta, Apple's, Amazon's AI services, right? So if AI was really benefiting everyone, then the whole index, the equal weighted index, should in theory be moving similarly high. So that's where you can see the bubble that's potentially there. Now, maybe there's more market share that the big seven can take from it, or the big six, because we know cash is actually going to NVIDIA. Maybe there's more market share that they can take, and that's what people are betting on. But it doesn't seem that way. It seems like what they're doing is trying to get ahead of other people coming along with an AI search product, like ChatGPT or something like that, and taking their business. I mean, Google has most of the search market. Meta and Amazon have a huge part of like the advertising market. It seems to me like they're defending their position much more than they're going out and gathering up more business. Now, because what I think is happening, if we let's look at Meta. We'll look at Meta and Google both. I'm long Meta. I think that's the only one of these I own right now, which I bought back before the AI stuff, 2021. So if we look at what happened to them in 2022, when they named themselves Meta and decided the metaverse was going to be the greatest thing, because nobody saw AI coming, even the people that were part of it, whose business it was to know that. So their earnings fell 38%, and you think, oh well, they grew 53%, and I like Meta, I'm long Meta, I hope they do well. But the big reason that this happened is because they cut tons of expenses. It's not because of AI, at least not yet. And Google was the same way. They cut tons and tons of expenses, and the benefits of those, took a couple years to come to fruition. And then we just had kind of a general recovery. And so you've seen that they've grown, but that's not really. I wouldn't say that AI is the main reason for that. I would say that the main reason is, one, stimulus was still kind of flowing into the economy, and the U.S. has done better than some other places, but it's cost cuts, and I know that Alphabet and I know that Meta had huge cost cuts. Microsoft, I think, had some too. Apple didn't have as many. But Apple didn't have the same sort of the same sort of earnings fluctuations. So they've just been flat. They haven't grown earnings at all for quite a few years now. And if it wasn't for the stimulus and the COVID, really they haven't grown earnings hardly at all. So this is kind of a crazy valuation for them. But the main thesis here is NVIDIA might make sense to have this kind of a rally. It doesn't make sense for all these other companies who are basically giving NVIDIA money to be rallying like this on the back of AI, without the whole S&P 500 rallying to a similar degree. And it doesn't look to me like they're taking market share. It looks like they're trying not to lose it. So I think when you put everything in that perspective, you can see that the market's probably being pretty irrational here with this level of kind of enthusiasm. Let's go back to the S&P 500 again. So, and we'll just look at so what did I say? It was at 19. Yeah, so it was at a 19 PE. That's, based on earnings, if they were actually, because of overall earnings of these companies, if it was at a 19 PE, they would have grown about 10%. Okay, it would be like a 20 or something like that. Or you would expect the price to grow 20 if the PE stayed or the price to grow 10% along with earnings if it was kind of being rational. But the price has grown 50, and now the PE is over 25. The basic blended PE, that's looking forward and back on fast graphs. So it's and it doesn't make any sense. Now the equal weighted PE makes a little bit more sense. It's grown about 30% when earnings have grown 10% or so. So that's still a PE expansion, but it's not kind of the crazy PE expansion that we've seen from these mega cap stocks. So what should an investor do about it? Well, this isn't like investing advice because I'm just share with you kind of what I'm doing. I'm not telling you I don't know your situation, so I don't know exactly what you should do. But I think you need to be careful about these cap weighted indexes. If I had a choice right now, rotating from SPY to an equal weighted S&P 500 index like RSP wouldn't be a giant change, but it would protect a person from this probable overvaluation of the Magnificent Seven and a little bit of downside protection from the bubble, basically, that the AI bubble and speculation that we're in. It seems unreasonable to me to think that all the benefits of AI are going to flow to first the Magnificent Seven, except for NVIDIA, and then they're going to collect that money, and then they're going to give that to NVIDIA, and that all the proceeds of this are going to go to just these 5 companies, basically, or 6 companies. You could throw in a few more maybe if you wanted to. So that just doesn't make sense to me that it's going to play out that way. And it's gotten to a valuation now where it's so extreme that, diversifying out from that concentration, I think, makes sense at this point. Now, I don't know exactly what the market's going to do. Markets can get like super crazy. They could double still from here. I mean, that's not what I would think would happen. But I mean, the markets, they can do whatever it wants to do over the short term. And people can be pretty crazy. So I don't know what's going to happen, but I think, in terms of allocation wise, it would be a good time to take some profits or rotate out into a more equally distributed allocation, if you didn't want to do anything too much. Now, I have about a third cash still in treasuries, and then short-term treasuries, TFLO is the ETF ticker that I use. And then I've mostly been building on growth businesses that are smaller. I mean, I own some of these Magnificent Seven stocks or some of these mega caps. I have Meta, I have Netflix, I have ServiceNow. But the percentage of my portfolio that they take up is dwarfed compared to what it's like in the S&P 500. I mean, Meta might be a couple percent. Same with Netflix and now. I mean, they might be a couple percent of the portfolio, 2 or 3, but not these gigantic weightings. And then, so I feel pretty comfortable there that I have a balanced portfolio and then I have some cash in case the market comes down again. And I'm pretty happy with that. I'm trying to find the growth businesses, more international businesses that I found. If you go over on Patreon, I have a pick every week. And I think half of those have probably been international, and most of them have been small caps. So that's what I'm investing now for the future, because these stocks just don't look like the returns are going to be good. They might not even crash. They might just not have great returns for a long time. It took Microsoft 17 years to regain the price that it had in 2000 at the peak. So, I mean, that's just, something to think about. That can easily happen again. Okay, if you found this useful, hit the subscribe button, hit the like button. Let me know what you think down in the comment section, and I will see everybody later.